Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. Thanks for tuning in today. I'm your host, Shana, and Financial Issues is a ministry that helps to teach the church, encourage the church to defund darkness, to have a biblically responsible investment strategy, and to find the light, to be a joyful, generous giver, an obedient giver. So today we are live. If you're watching on during the live time, which is 8 a.m. Central, 9 Eastern Time, and our phone lines are open. So you can get your call queued up. The phone number, 610-363-1110. You'll be the first caller in the queue today, and the phone lines are open and ready for you to call. On today's show, we're going to hear the latest relevant economic headlines of the day, including the China deal, inflation, and the Trump international tour. First stop, the Middle East. We'll also get encouragement from the scripture today from Luke 1:15. And as a reminder, two partners, an alert went out announcing our partner conference call for the month. It's going to happen tomorrow. That's May 15th, 9:30 a.m. Central Time, 10:30 Eastern Time. There are instructions on how to log in if you go to the email that you got, and also you can just log into the partner side of the website and see the phone number to dial in. If you are not available to listen live, you can always listen to the replay. We typically get that posted the same day that it happens, just depending on how quickly we can get it through the regulatory process. If you have questions, if you're a partner and you have really partner-specific questions that are not really edifying or interesting maybe to the general listenership, go ahead and send those in to Pat. You'll need to get them in today by the end of the business day in order for me to have a chance to answer them on the partner conference call again tomorrow. Check your email, check the partner side of the website. All right, let's get to it. The economic news, the biggest news, I guess, is the trade deal with China. The deal is imminent, and it has taken way less time than what was expected. It seems all of the anxiety and tension in the markets was way overdone. So the latest is that U.S. tariffs on China have been lowered from 145% to just 30% for this 90-day pause where they're going to be working out a deal. And China tariffs on the U.S. are lowered to 10%. More to come on that, I'm sure. Lots of things will be unfolding, and we'll keep an eye on them. On the inflation front, so we learned yesterday that tariffs imposed in April seem to have had little to no impact on inflation so far. We got the read on CPI yesterday. Core CPI month over month increased 0.2%. That's more than the 0.1% or the 10 basis point increase that we saw in March, but below the 0.3% that was expected. The annual rate for core inflation sits at 2.8%. Folks, that's a 4-year low. It's unchanged from March and came in just as expected. Let's shift to the headline number. So the core number excludes food and energy because they say food and energy are volatile, so they want to look at the core number. Headline number is relevant to me because it includes food and energy, which are two budget items that individual Americans spend lots of money on. So the annual rate for headline inflation now sits at 2.3%. Also the lowest in 4 years. That's since February of 2021. Came in better than the 2.4% that was expected and better than the 2.4% that we saw in March. Energy cost declined 3.7%, more than the 3.3% fall in March. Prices for gasoline were down 11.8%. Fuel oil down 9.6%. Natural gas, though, those prices soared 15.7% as there is a more of a demand for natural gas. Inflation also slowed for food, 2.8% versus 3%. No more $8 a dozen eggs, I guess, if you get the good kind. And transportation increased 2.5% versus the 3.1% previously. And inflation in shelter steadied at 4%. On the other hand, prices increased faster for used cars and trucks, and new vehicle insurance costs are still a problem. To narrow down the monthly moves, so what's moving inflation in its current direction, we look at the month-over-month number, so up 0.2%. That follows a 0.1% decline in March, and it was better than the 0.3% expected. Shelter costs rose 0.3%, according for more than a half of the overall monthly gain. So where is inflation going? The annual numbers may be 2.8% and 2.3%, which is pretty darn close to the Fed's 2% target. But that is a backward-looking number for an entire 12 months. So if we break it down, if we take the last 3 months and try to extrapolate the trend forward, we annualize the last 3 monthly reads, we get a 3-month annualized headline inflation number of, you ready for this? 1.2%. The 3-month annualized core number, 2%. So what about tariffs? Well, like I said, minimal impact so far. Could be because companies stockpiled inventory before tariffs went into place. So since not a significant amount was imported due to the inventory buildup, and for May, we'll have this current pause that starts just about immediately. So less than half of May subject to tariffs. The threat to inflation may be neutralized at this point, depending on what comes of all of the trade deals. According to Trueflation, which measures real-time inflation over millions of price points for May 13th, it says inflation now sits at 1.57%. So, if inflation is headed down, if the economy is strong, if unemployment is still low, why not lower rates to help small businesses who have received the majority of the collateral damage from Bidenomics? Trump's wondering the same thing. Trump's back on Powell's case. In a Truth Social post, Trump said no inflation and prices of gasoline, energy, groceries, and practically everything else are down. The Fed must lower the rate like Europe and China have done. Trump posted this to his Truth Social platform. So he went on to say, what is wrong with too late Powell? Not fair to America, which is ready to blossom. Just let it all happen. It will be a beautiful thing. However, the Fed has signaled that it will wait to cut interest rates until there are either signs of inflation returning to its 2% target or a weakening in the labor market. Sort of interesting that Jay Powell, who claims to be apolitical, is making some comments about tariffs. Turns out he might be wrong. You know, he might be wrong that the tariffs are going to impact inflation, and the Fed has to keep an eye on that. Of course, they do have to keep an eye on it, but the Fed remained eerily silent, very apolitical, when Joe Biden and the Biden administration and Congress under Biden's watch were spending money like drunken sailors. There were times, sure, that he alluded to the fact that fiscal spending can impact inflation, but he really focused more on the supply chain issues and things like that, and really said, spending money is up to Congress. It's not really the Fed's business about what Congress chooses to spend. And, the Fed can do little about that, but shouldn't the financial experts of the world gathered together at the Fed lend some constructive criticism or some advice to Congress about the path of spending? And sure, he's made comments here and there, but just seems like that feud is getting fired up between Jay Powell and President Trump, who, by the way, Trump is the one who appointed Powell. I don't think he'll get reappointed when his time is up. I don't think Trump's made any secret of that, but it'll all be interesting to play out. Now, all of the attention has turned to the big, beautiful bill that Congress is working on. So, posted some more about this in the commentary for the partners. If you are a partner, you can check that out by logging into the partner side of the website, go into your partner dashboard, and then clicking on the commentary. Hang around, folks. We're going to be right back after this break.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
Every day, thousands of women are faced with the decision of whether to have an abortion. But one ultrasound can change everything. For just $28, you can provide an ultrasound, giving a mother the chance to choose life. To make your gift go even further, a generous donor will match every dollar you give, doubling your impact. Just go to preborn.com/FISM to give now. Again, that's preborn.com/FISM.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. I'm your host, Shana Burt. Don't forget about the partner conference call tomorrow, May 15th, 9:30 a.m. If you're a partner and you have questions that you want us to address, send Pat an email. We'll need to get them in by the end of the day today if we want to try to get them included in the partner conference call tomorrow. So, what is helping inflation continue to come down? Well, remember when oil prices spiked and inflation was out of control? Oil's a pretty big component of inflation because you use oil to make just about everything. Not only do you put it in the tank of your car to get from point A to point B, it's used in the production of a lot of things, and we import oil as well. So as we look back at April, one of the biggest market stories was a sharp decline in oil prices. West Texas Intermediate oil fell below $59 a barrel, while Brent crude dipped just above $63. That's a 5% monthly drop and the steepest decline in more than 3 years. So what drove the oil prices down? First, it was all that talk, that fear-mongering about recession. Although major financial firms now drop the chance of recession to 35%. The U.S. and China ramped up their trade conflict in April with the tariff news. That weighed on global manufacturing and trade expectations, something that oil is used a lot in, and it pulled down projected oil demand across the board. But that seems well on its way to a resolution as well. Then we had Russia. Russia produced just under 9 million barrels per day in April, slightly below its sanctioned quota, but still a major supplier. OPEC Plus signaled that it would begin ramping up production, potentially adding over $2 million a day by November. So much different than what happened when Biden made his trip to Saudi Arabia and gave the king a fist bump and a plea for more oil, and he very promptly said no. We saw roughly 150 million barrels were added to the storage tanks and tankers since mid-February, pushing that sluggish demand and excess supply. So what does this mean for import prices? Well, we import a couple of things. Oil is important to imports because we import oil, and it also takes oil to get things here. So to put in the tankers to get those things here. So April may be the last month of that temporary relief that we see in oil, but maybe not. Even as oil prices fell in April, the rollout of new tariffs on a wide range of goods means that imports will begin to cost more moving forward. That assumes that the tariff issue doesn't get delayed. So what's the outlook for May? Well, in early May, oil prices have begun to rebound. Brent is above $66 a barrel. West Texas Intermediate is approaching $64, and that rebound is driven by a combination of easing geopolitical fears and better than expected U.S. inflation data. Bottom line, April gave us a temporary reprieve as those oil prices fell, but with Russia still pumping strong, OPEC Plus increasing supply, and new tariffs kicking in, we're likely to see import prices and overall inflation move higher. So it's a critical area to watch. The Fed is under pressure, though, to cut interest rates. But if energy prices rebound, that may give them cover to wait a little bit longer and push back against Trump, although they say that's not what they're doing. So Trump is ahead of the curve in this one, too. President Trump made headlines this week with his high-profile visit to Saudi Arabia, his first major international economic mission since returning to the campaign trail. In Saudi Arabia, well, they rolled out the red carpet. Actually, it was lavender carpet, which is symbolic of generosity. He was met with a lavish royal welcome in Saudi Arabia. He had a full military honor guard, the lavender carpet, that sign of generosity, a horseback procession escorting the U.S. presidential limousine, a ceremonial golden sword dance, a traditional gesture of hospitality for esteemed guests. They even brought in a mobile McDonald's and played the YMCA song for Donald Trump.
Wow. That's a kingly welcome.
Trump and his delegation were hosted at the opulent palace where he met with the Crown Prince. A state dinner followed, attended by members of the royal family and top Saudi ministers. No fist bumps here. Trump shook hands with just about everyone in attendance. Trump's goal was clear: to re-establish U.S. energy dominance and strength with its partners. He was joined by an impressive delegation of American business leaders, including, I've seen conflicting reports, but the last one that I saw said Elon was there. You had the CEOs of OpenAI, NVIDIA, BlackRock, Amazon, Palantir, Blackstone, Northrop Grumman, Coca-Cola, and Boeing. The outcome? Trump and U.S. business leaders walked away with $600 billion in investment commitments from Saudi Arabia to U.S. industries, including energy, defense, and technology. This is being called one of the most significant bilateral investment deals in recent history. So, how does this tie back to oil prices? Well, Saudi Arabia and other OPEC nations have recently increased production. So what lower oil prices does for the U.S. consumer, it helps us with inflation. What else does it do? Well, it hurts Russia. Lower oil prices hurt Russia and is going to more quickly bring them to the negotiating table. Bottom line, Trump's trip to Saudi Arabia was about more than optics. It's a clear sign of his focus on low energy costs for America, America first business diplomacy, reshoring manufacturing here, creating jobs. And actually, it's different than the Biden administration that thought that their job was to create jobs for the American people. Trump is making an environment where businesses can come in and create more jobs for Americans. And the markets responded. Yesterday, the markets were feeling pretty good after Monday's big wins. The S&P 500 broke into positive territory for the year of 2025. The Dow yesterday closed down 0.64%, the S&P down 0.72%, and the NASDAQ up 1.6%. Can you guys confirm that those are the right numbers?
That is confirmed, Shana. Yep. S&P was up 0.72.
Got it.
Yep.
Okay. And the pre-markets this morning are continuing to look like they will open in positive territory. The Dow's indicating an open up 16 basis points. The S&P a quarter of a point, and the NASDAQ almost a third of a point up. In April, we got the just this week we got the report, the NFIB Small Business Optimism Report for April of 2025. Not surprisingly, with all the talk of tariffs and everything, all of the other challenges that the small businesses are facing right now, the optimism dropped to 95.8, down 1.6 points from the previous month and the lowest since October. This was slightly better than expected, though. They were expecting a number of 94.5. This was the number for April, though, and April included Liberation Day. April also included all of the frantic worry and fear-mongering about what the tariffs would do to the economy, with little faith that Donald Trump would get it worked out in a timely manner. Turns out it doesn't look like that's the case anymore, though. So I would expect small businesses to start feeling more optimistic as the trade war, trade deals continue to roll in and inflation continues to decrease. Let's get to the stewardship verse of the day. It comes from Luke 1:15. For he will be great in the sight of the Lord and shall drink neither wine nor strong drink. He will also be filled with the Holy Spirit even from his mother's womb. Seth? What do you think?
It's a good one, Shana. So this verse is referring to John the Baptist, Luke chapter 1, about whom obviously great things were prophesied. The question I want to ask rhetorically is this: how can a clump of cells be filled with the Holy Spirit? How can a clump of cells? The answer is it can't, because a clump of cells is a person. It is actually a person. John the Baptist was a person as much as he was in the womb as he was outside. In fact, a little bit later we read that John actually leapt in the womb of his mother when he came near to the unborn Jesus Christ in his mother.
You mean clump of cells?
Yeah, the clump of cells. I'm not sure exactly why it leapt. No, he knew that he was encountering the Lord Jesus Christ, unborn at that time. Pretty amazing stuff, Shana. Obviously, the point with this is that God ordains life from the very beginning, and Absolutely. We see that so clearly in John's life and in our Lord's life as well.
Yeah. So we also see from this passage many prophecies about John's life outside the womb, proving that God has indeed written all of our days. God has purpose for each and every soul that he has created. As good stewards of the lives deposited inside the wombs God chooses, our right response is to protect the physical lives of those babies and to cultivate the gifts and purposes destined for each one outside the womb. So we should pray for and encourage women who don't understand this basic truth and who have initially perceived that the clump of cells growing in their bellies is a threat to the good life ahead of them. When we partner with Preborn Ministries, we get the opportunity to be part of that eye-opening process that conveys truth to women who are considering snuffing out that life. What a privilege. We might not be the one working the ultrasound machine or speaking the gospel words of life and encouraging or taking the hand of the woman and possibly the father to lead them in the sinner's prayer. But we could be the one to pay for the ultrasound that made that encounter possible. We hope that you'll consider contributing to the preborn campaign. We're trying to help them raise enough money to get 50 ultrasound machines into pregnancy centers across the United States, so what I just described could become a reality. Women and men in crisis pregnancies could go into a preborn center. They could see their baby on the screen. They could hear the heartbeat. They could hear the life-saving message of the gospel, and they would choose life, not only for their babies, but eternal life for them, and bring that child up in the fear and the admonition of the Lord. Well, so far we've raised a little over $33,000, and that gets us almost to 6 ultrasound machines. We're halfway through the month, got a long way to go. We hope that you'll consider making a contribution today. Well, folks, if you're listening to an outlet that only carries the short version, we wish you a good day. For everyone else, stick around. We've got more financial issues coming up.
Where's Mima? We found out Shepard's diagnosis when I was about 17 weeks pregnant. We learned that he was going to need a series of surgeries after he was born in order to give him what they considered a normal life. And we weren't sure how this worked.
Yeah, very emotional, very, very broken. And as my wife just said, not sure how this worked. And called Samaritan, and they said, you just go have that baby. You leave the rest to us.
And just to hear the confidence on the other end of the phone of, this is not something that you need to be concerned about at all. You focus on the health of your family, the health of your baby, and we will walk with you every step of the way.
May is a time to honor mothers, their strength, sacrifice, and unconditional love. But for many women, motherhood feels uncertain and overwhelming. Fear and doubt leave them considering abortion. You can give hope. Preborn provides free ultrasounds and shares the life-changing message of the gospel, reaching women in clinics across the country. When you give to Preborn, you're giving these women a chance to choose life. Just $28 helps a woman hear her baby's heartbeat, a powerful moment that leads 80% of mothers to choose life. And when we come together to sponsor 200 ultrasounds, we'll equip a preborn clinic with a life-saving ultrasound machine. Will you help make motherhood possible? Go to preborn.com/FISM to give today. That's preborn.com/FISM.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I learned how to pray to God. It helps me through my day. I will commit myself to learn more about God's Word, to be able to share the gospel to others. Jesus has been a big impact in our family. Now we go to church every Sunday. I see more happiness and less arguments. God's love is so perfect, I will not change God for anything.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
Welcome back to Financial Issues. Thanks for hanging with us. We're in the second part of the show here. Our phone lines are open. If you have a question, you can give us a call, 610-363-1110. We do have a caller waiting patiently in the call queue. We're going to get to him right now. John's calling us from Texas. Hi, John. You're live on Financial Issues.
Hi, Shana. I appreciate your show. I'm in the growth model, and I am about 7.5% over in ETF 1 and 4% over in Mutual Fund 72. And I know with mutual funds that I could exchange out of there because I need to fill my defensive funds. But the ETF, shall I just treat it like a stock and just sell that 7.5% and put it to work elsewhere? Because I don't have all my sectors filled yet.
Yeah, so that's what you have to do if you're overweighted in a sector or an area of the asset allocation model. That's the thing to do is to you have to get rid of it to be able to redeploy the funds somewhere else. And it's sort of a natural process. As you invest in things, as they grow over time, what you'll see is that some of your investments are going to grow faster than others at times, and others are going to hold up better during downturns. And so you'll just naturally, the way that your different investments move at different times will create some imbalances, and you can correct those as you do your rebalances.
Okay, very good. Well, I'm gonna sell out and put it to work elsewhere.
Sounds great. Thanks, John. Thanks for the question.
Thanks, brother.
Thank you.
It's good stuff, Shana. Always good to hear that.
Yeah.
Shana, it seems like a lot of, doing the partnership well is just kind of that steady day by day work with it. It's not like anything magical,
It's not. It really is. I mean, I guess if you listen enough, or we're not selling some big secretive strategy on how to get rich quick. We look to the Bible for lessons on how to invest. Number one, we invest biblically responsibly. We want to honor God in everything that we do because we believe that God owns everything. So our right response is one of gratitude. And because we're grateful to the Lord, because we believe that everything that He says is true, we believe that He made males and females, and He made them a way for a certain reason. We believe in the sanctity of life. We believe in the covenant of marriage. We believe in all of those things in Scripture. And so we don't want to use the money that God owns, that He lets us use while we're here. We don't want to let that money promote things that grieve the heart of the Lord. It is truly a spiritual battle. When I first learned about biblically responsible investing, and I started weighing it out because I had been in the business for a really long time, and when I first came across Dan Celia's program, this program, when Dan Celia was the host, and I heard him talk about biblically responsible investing, I had no idea what it meant, but it set me on a journey to find out, because if I was doing something that was even unknowingly, that was grieving the heart of the Lord, I wanted to know about it because I wanted to do something different. And I knew that if it sparked that desire in me, the work that Financial Issues was doing was very important because it delivers a message. It reveals some eye-opening information to Christians who love the Lord, who may not know what they're investing in, who may not know what the companies that they're investing in is investing in. And, that makes us complicit. That makes us partners. That makes us yoked with the companies who are funding the Planned Parenthoods of the world, who are funding gay pride parades and gay festivals, that are perpetuating the lie that maybe God made a mistake with you. You get to choose what you want to be. You get to choose who you want to love. You get to choose, whether or not that clump of cells growing inside of you gets a chance at the life that God gave it. So, I see BRI, biblically responsible investing, as a spiritual battle. And it gives us the opportunity this is why we call it defunding darkness. It gives us the opportunity to remove the use of the funds that God gave us from the agenda that promotes darkness, because money is neutral. Money is just a medium. It is what makes the world go round. It takes money to fund churches and ministries. That's why we're raising money for preborn, because it costs money to give ultrasounds to women, to orchestrate that meeting and to get the opportunity to speak the gospel to someone. It takes money to send missionaries across the world, to dig wells, to build orphanages, to help people in natural disasters, and all kind of things that open up the opportunity for us to share the life-saving gospel of Jesus Christ, because people don't really care what you know until they know that you care. So doing ministry, doing acts of kindness and things to help people gives us the opportunity to share that life-saving gospel. But you know what? It also takes money to fund the kingdom of darkness. It takes money to run Planned Parenthood clinics. It takes money to put up billboards that twist the scripture and say that you're loving your neighbor if you give them the right to come to your state and kill their baby. It promotes gay pride parades that celebrate and encourage sin, that plants ideas in vulnerable children's heads that they may not be what their chromosomes say they are. They may not be a male or a female, and they get to choose. Think about that video that I saw with a young kid, couldn't have been more than 4 or 5 years old, sitting down, and he was presented with 2 Oreos or $10,000 in cash. What do you think he chose? I mean, you probably heard me say it, but he chose the Oreos. He didn't choose the cash. He had no idea what he was doing, yet we think that a child that age has the capacity to decide if he wants to be a boy or a girl, and to go down a path where he may take, hormones that attempt to change his. You can't change your chromosomes. You just can't. You can cut off body parts and add body parts on, and you can, take hormones that are probably going to disrupt your physical health and your mental health more than they will help you do anything, rather than to affirm the misconception that you believe that you're not what God made you to be. Instead, we should be speaking the truth to these children. We should be telling them that they are made in the image of God, that they are made with a purpose, and they are made male or female for a specific purpose, to help them find their God-given calling. So we shouldn't be supporting these things with our investment dollars, and we should be giving. When we give, that gives us an opportunity to deploy our dollars right into that spiritual battle. Not only to withhold money from the evil that's being done, but to fund the good things that are being done. All of those things that we talked about. So got off on a little tangent there. Thanks, Seth.
That's awesome. No, I appreciate that a lot. That's good stuff. Shana, we might be able to squeeze a real quick one here.
Okay.
Kate is saying, I have some bonds since 2008. They've done well until the past 3 or 4 years. Do I need to cash them in? And I'm 64 years old.
It really depends on their BRI status. So you just heard me rant about biblically responsible investing. So you can screen those to see if they are. The other thing that will matter is the rate that they pay. So if they have a good interest rate and you're getting good income from them and they're biblically responsible, maybe you just code them into the fixed income part of your portfolio tracker and keep them for as long as you can if they're paying a good rate and they're clean.
Very nice.
Wow, I didn't think we would get that in before the break.
Yeah, miracle.
but we did. All right, folks, we have Craig Haugaard. He's back with the Ag Report. We're going to hear from Craig. We're going to take a short break, and then we'll be back.
This is Craig Haugaard with your Financial Issues Ag Update for May 14th. Well, the corn market made new 2025 lows in the July contract as the quick planting pace and beneficial weather forecast outweighed Monday's USDA report and the enthusiasm that came from the Chinese-U.S. trade progress. As a result, July corn was 5.5 cents lower at $4.42.5 per bushel. The soybean market had a roller coaster session, with soybeans erasing Monday's gains initially after the market took on a more cynical outlook for U.S. soybean export demand after the optimism from the Chinese tariff announcement wore thin. What rescued the soybean market was soybean oil, which is back in the news. It's being reported that the 45Z program is expected to see an extension added to the U.S. budget bill, which is going to allow for the investment horizon to be expanded. As a result, July beans were able to close a penny and a quarter higher at $10.72.5. Now, after being knocked down by an even more bearish supply and demand table from the USDA, the wheat market got somewhat of a reprieve in yesterday's trade. We seem to be back to trading the world market, which really didn't weaken after seeing the USDA's forecast. As a result, we had Minneapolis July wheat actually a little bit lower. They were down 3 1/4 cents on the spring wheat at 5.80 3/4. Kansas City hard red winter wheat was up 3 3/4 at 5.11 3/4. And Chicago was a couple cents better as well at 5.17 1/4. Cotton markets just kind of remained mired in a sideways pattern. July futures ended the session 36 points lower at 66.28. Livestock futures were mixed. June live cattle futures were 50 cents lower at $216.32.5 per hundredweight. We had August feeder cattle declined by 37.5 cents as they settled at $306 per hundred, while June lean hog futures were $1.20 higher at $99.50 per hundredweight. Class 3 milk futures saw their recent rally slow down. At the close, June futures were only up 12 cents at $18.78. Now, as recently as July 7th, we closed at $16.69. So we've enjoyed a pretty good run here lately in the milk futures. Well, this has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
Each May, we celebrate Mother's Day and the gift that mothers are to us. This May, you can help make motherhood possible by supporting Preborn. Preborn partners with clinics across the country, providing free ultrasounds and sharing the hope of Jesus Christ with women who are abortion-minded. When you give to Preborn, you're giving these women a chance to choose life. Go to preborn.com/FISM to give today. That's preborn.com/FISM.
What separates Crossroads Kids Club from other ministries to reach school-age children? What sets you guys apart?
First of all is our connection with local churches. We mobilize, equip, train, support local church partners. We're right inside the schools. There's a number of ministries that try to serve public school children outside of the school, but we're able to be right there on the campus. Another key thing is just our values. Our highest value is actually relationships. And so we're not a ministry that's driven by a lot of fancy technology or flashy stuff, but rather getting adults who love Jesus and who love kids to sit on the floor with a group of kids, to listen to them, to love them. So I would say the relational emphasis and the simplicity of the model is actually something that makes Crossroads special as well.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. Let's take a look and see where the markets have opened this morning. They were indicating a positive open. The S&P has opened pretty much flat. The NASDAQ is up 1/4 point, almost what it indicated. And the Dow is pretty flat, just barely in positive territory. All right, let's continue on with some of the questions that we've gotten.
Sounds like a plan, Shana. Let's start with Bob. Bob recently learned that SIPC has protection limits on brokerage/investment accounts. Can you recommend options for when our IRAs exceed these SIP protection limits, like in a separate capacity of $500,000, for example? And he mentions ages 73, 75. I assume that's him and his wife. So what would you have for Bob, Shana?
So SIPC protection doesn't protect you against losses in the market value of your account. It doesn't protect you from stocks going bankrupt or bonds defaulting or anything like that. What it does is it protects you from the brokerage firm that you're using going out of business and either losing or taking your securities. I don't think it's a huge risk. I mean, if you are really concerned about it, I guess the thing that you could do would be to have multiple IRAs on different brokerage platforms. But to me, it's more trouble than it's worth to try to do that because, if you're 73 and 75, you now have required minimum distributions. So you're going to have to keep up. If you split up your IRA and have that in different places, you're going to have to keep up with the IRA calculations for the different IRAs. You're going to have multiple statements. When you pass, your heirs are going to have to work with multiple organizations to kind of collect the balances in those different accounts. And, the penalty for missing your RMDs is quite stout. It's 50%, a 50% tax on what you should have taken but didn't take. So it does make your record keeping a little bit harder. I don't think the risk that SIPC insures against is a significant risk. I mean, I think you have far more chances of, losing market value just in the fluctuation of stocks than you do the risk of losing everything because a brokerage goes under and commits fraudulent activity.
Good stuff, Shana. Next one up here is Tommy. He says, Shana, Wall Street reports that FP42 is being investigated for accounting fraud in a subsidiary. I see the stock has been moved off the buy list to the broad list as a hold. What are the odds the stock will drop to nothing or near nothing? I purchased some when it was on the buy list. What would you have for Tommy here, Shana? 69 years old.
So it's always a possibility, what Tommy laid out, that it could drop to nothing or near nothing. That's a possibility when you invest in any security. The probability, though, that it will do that is low. It has dropped already a good bit. It's something that we're watching. It's not something that you could have seen coming because, as soon as the news was announced to the public, the market reacted, and a lot of times it does overreact. Of course, the rest of the news could come out and it could be worse, and so I indicated that in the note to the partners. But at the end of the day, if you're following kind of our rules of thumb, it should be 3% or less of your overall portfolio. So even if it does go to zero or to nothing, it should have minimal impact on your overall portfolio. But again, if we thought it was a high probability, we would have issued a sell already.
Nice, Shana. Next one up is Kathleen. Kathleen is asking about unbalanced sectors, saying, my husband and I are in our late 60s. We own 3 rental houses, free and clear. The value's around $1.1 million. I assume that's total, Shana. They use the $11,000 a month income from the rentals for living expenses, giving generously, investing in the stock market. And because of these rentals, we have minimal stock in the REIT sector. So my question is there a way to customize adjustments in FISM's recommended asset allocation model to remove an unwanted sector? And how would we adjust percentages of the other sectors to make up for the lack of the REIT sector, for example? They don't expect to need those investments for at least 10 years, by the way. What would you have for her?
So, I mean, you could sort of consider your rental properties just like an outside business, and you wouldn't really include that outside business on your portfolio tracker because the things that you include on your portfolio tracker are going to create imbalances in your portfolio if you're not perfectly balanced, as you mentioned. And so what happens when you're overweighted in a certain area? Well, the logical thing to do is to sell the things that you're overweighted in. Doesn't sound to me like you want to or probably should sell your rental properties. They're bringing in, a good bit of income for you. As long as you're comfortable doing all of the duties that a landlord has to do and taking the risk that comes with that, it's probably worked out to be a good investment for you. So you could leave it off altogether. You could either just make a mental note that you have real estate exposure in other areas, so you're just going to forgo that category and just be okay seeing an underweight when you look at your chart and an overweight. The other thing that you could do was, now you can't delete or change the targets for the different sectors. So the portfolio tracker is something that has been custom designed for our strategy, and it is driven by the asset allocation models that we put out. So you just either make a mental note that you're going to be over or underweighted in a certain area and just be okay with that, or if you're sort of OCD, like I tend to have these tendencies sometimes, there's a way that you can sort of manipulate the tracker, but it's going to involve doing a little bit more complicated than normal math. Basically, what you would do, you wouldn't put the entire $1.1 million in your portfolio tracker. I'm assuming that your investment portfolio is, roughly the same or less than that. If you put in that 1.1 million, it's going to totally skew your output. So what you could do is you could just figure out if you think, okay, my real estate holding is going to cover the exposure that I should have to REIT. So I'm just going to make an entry here that shows that my REIT sector is fulfilled. So for example, if you had a $90,000 portfolio and let's say that the exposure to REITs was 10%, you would just make a little entry that says that you have $10,000 in REITs. So, I mean, it's not, a perfect solution. You'll have to work around it a little bit, but there is a way that you can do it. And if you can't do the math, just put a number in there and see how it comes out, and then you'll know if you need to go up or down based on whether it tells you that you're perfectly weighted at that point or not.
Good stuff, Shana. Menda's up. Yeah, no, that's great stuff. Menda's up next here. So she's saying, I've heard that the top 3 brokerage firms will be in trouble if we go into an economic crisis. Not sure what that means, but what if I own or trade stocks inside a retirement account in one of these 3, but I don't invest in any of their brokerage's funds because they're not biblically responsible? Will I be vulnerable outside of the normal vulnerabilities of owning stock? It's a good question.
Well, sure, and that kind of springboards off the other question about SIPC coverage. So that's what the SIPC coverage is for, is if the, it's for if these brokerages do anything illegal, if they misplace your securities or, don't have your securities when they say that they did, it helps to cover that. But I'll tell you, if the top 3 brokerage firms are in trouble, it's going to have to be from some kind of major life-changing economic crisis that is not only going to affect them, but it's going to affect everything. But the fact of the matter is, even if the brokerages are in trouble, and I find it really hard to believe that could be the case, because a lot of brokerage firms get their revenue from assets under management. So if it's kind of impossible to think that we would have an economic crisis, the value of stocks wouldn't change, and that the brokerages would be in trouble because a lot of their revenue is derived from the value of the underlying equities. So I don't know. I mean, I'm not sure where you read it. I don't want to try to discredit any sources, but it's not a concern of mine.
Yeah, it's good, Shana. Awesome. Probably the last one for the day here. Steven is saying, Arkansas passing legislation, more states to follow to make gold and silver a legal tender. Seems like it might be a wise thing to do to put some money into this. So I have approximately $600,000 in retirement. In addition, I have $126,000 in an old 401k, and I was thinking about purchasing $50,000 in gold or silver. I have no debt except a mortgage, pretty high annual income, almost $300,000. What do you think Steven should do? He's 65.
Well, I'm not a fan of purchasing metals physical metals in an IRA at all, because there are, potentially high commissions to do so. You still have to pay custodian fees, and it totally defeats the purpose of trying to use that gold for commerce. Because if you own gold inside of an IRA, you have to have a custodian hold it, which means that it's not eligible for you to use for buying and selling things. Because if you do, it's considered a distribution from the IRA account, and then you have to pay taxes on it. So it doesn't seem like that would work if you are trying to buy gold and silver for commerce reasons. I think that's all we have time for.
I think so. Yep.
Well, folks, thanks for tuning in today. We hope that you learned something. We hope that you were educated. We hope that you were encouraged. And we hope that you'll find out more about our biblically responsible investment strategy by going to financialissues.org. Come back tomorrow. Lord willing, we'll be here to remind you that time's getting short. The master's coming back. There's going to be an accountability exam, and we want to help you be found a good and faithful steward with all that the Lord has trusted you to manage. I'm your host, Shana Burt. Find out more about our ministry at financialissues.org.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.